In 2009, obviously because of recessionary conditions, we saw the figures for private equity dwindle by almost a half. What's the picture now that we're talking slowed recovery, but recovery nonetheless?
Good evening, Lerato, and thanks for having me. I think actually the numbers for 2009 were actually a lot worse than that. The peak we had was in 2007 in South Africa from a South African perspective. The level of investment activity was 25 billion rands. In 2009, that number was 7 billion rands. We think that this year will actually be a lot worse than the 7 billion rands of last year. So the market activity is actually a lot slower than in the earlier years.
Right. Well, obviously South Africa, because of its infrastructure and the fact that it's the largest economy and quite diverse, tends to attract a lot of the private equity capital coming onto the continent. But just looking at Africa as a whole, how does the continent fare in terms of general deal flows? Because we're told globally we've seen about $180 billion directed towards investment. Africa's only attracted collectively just over $1 billion. So that's a fraction of what we're seeing internationally.
I think that is true. I think one has to look at it in context. Well, firstly, I think the positive thing is that it's a higher number than last year, so that's a positive trajectory. It is lower than, let's say, the peak years of 2007 and 2008. I think one has to look at it not on a year-by-year basis. We've seen substantial increase in the private equity community and capital over the last 10 years or so, largely off the back of the significant improvement in the economic environment in the continent. We're currently facing some short-term challenges in our view. We're very positive about the long-term trajectory and development of the sector. But we do have, call it some short-term challenges in line with the global economic environment. So we're not totally immune from that. I think just to add, a lot of the capital that gets invested in Africa for private equity comes from a portion comes from local sources, but there's a significant portion that comes from the markets such as the US and the UK, and clearly the global factors do affect appetite from those
What are the fundamentals that make the continent attractive? We're told that demographically, investors are keen on Africa because 45% of the population is the youth. So you've got a potential market going forward, but also we've got sustained high GDP growth rates, irrespective of what's happened globally. But certainly there must be other factors at play.
I think there's a lot of factors. Certainly if one looks back in the last decade or so, we've had significant growth in Africa. The continent at large is said to have GDP of roughly $1.6 trillion. So it's very hard to ignore from this perspective. And what's underpinning that is clearly the significant change from a political perspective, A, and then B, the macro economics policies that have been put in place in the last couple of years in the continent, which do foster business growth and development. So that allows the energies of Africa to come through.
Let's bring Lumkile into the conversation. Yes, you've declared you're also a private equity investor. Which would be the African hotspots? We're told that Nigeria would grow somewhere between 5 and 7% next year, Angola 7.7%, Ghana 17% according to the World Bank.
Well, Ghana potentially, I mean, it's got very sophisticated population and a nice diaspora like Nigeria. Therefore, with the discovery of oil and the downstream beneficiation that we expect them to push very, very hard, they're likely to create a whole lot of opportunities, particularly in the polymer sector, the plastic sector, in the medium to long term. But you know, in East Africa remains extremely attractive, from Uganda, Kenya. We just talk about Tanzania now, but also even a country like Malawi. So there's a lot of potential, and also the entry level costs are very attractive. Unlike if you compare to mature markets where you have to really put a number leg. What's challenging is going to be the role of the PIC. Now that the PIC is being given a mandate to go into the rest of the continent, we want to see them really playing a leveraging role with companies like Medu domestically, but with others in the rest of the continent.
Okay, you concur in terms of sectors that are attractive? We're told telecoms?
I think we come from a low base. There's significant opportunity. There's a lot of unmet demand. Clearly, the likes of telecoms, agriculture, your consumer-facing industries, including banking, mining, are all sectors that are punted as being quite attractive. But I think that there's a broad range of opportunity across a different set of sectors. We invest in a number of businesses locally across different sectors, and generally the prospects are quite positive.
Okay, and now here's another challenge. You've mentioned a challenge in terms of what the PAC will do to leverage players going in there. We're also told that there's a whole issue about the valuation of African companies. Companies that will be regarded as market leaders in Africa are the ones you target, but then they'd be coming at multiples of 5 to 8%, whereas in the developed world and effectively in other emerging markets, you'd be looking at multiples in the double digits. To you, how do you overcome that sort of disconnect? You get the asset cheaply, but you're going to have to pump in a lot of money to grow it, to make it liquid, and to make it attractive to sell at a profit.
I think from an investment perspective, to get access to opportunities, higher growth opportunities at lower than comparable valuations is certainly a compelling story. So that's actually a very strong positive, that we can invest at those lower relatively multiples to the mature markets, and in fact, as a contrast to, let's say, other emerging markets like India and Brazil, our positioning is that our pricing is actually quite attractive relative to those markets.
Lumkile, just your views on this one. It's not just that, it's also you buy the company. It's very difficult apparently in Africa to restructure a company at a management level, lots of regulatory issues, but also in terms of being able to list a company and try to capitalize it so that you can exit after 5 years, because isn't it right? Private equity, you're looking at a 5-year investment strategy. It's very difficult to leave after 5 years because of some of those conditions.
Well, I mean, you don't have to exit through listing. There are various other ways of exiting, including getting other buyers. Particularly if the company is doing extremely well and the cash flows going forward are very attractive, you could get other players coming in. But interesting for me is the fact that a lot of the foreigners have also made a mistake in the South African market, in a company like Forbes and a company like Edgar's, where people overpaid and they've got a huge debt embedded in those companies. So you've got to get your valuations correct. Even in unlisted entities, these two entities were listed. So you can make those mistakes. But however, one has to approach private equity in a portfolio term, so that if you make mistakes in one or two, but as a broader portfolio, you really make the right plans.
All right, you want to add to that?
I'd say that a good business, strong management with good fundamentals, exit is not much of a concern. I think there will always be buyers for good businesses.